South Africa's consumer inflation has eased to 6.3%, making it the lowest reading since April 2022, and the rate was 5.9%. Prices of meat, oils and fats, as well as fruit, have softened slightly, but prices of sugar, sweets and desserts, as well as the cold beverages category, recorded an average annual price increase during the period.
The transport index increased by 7% in the 12 months to May, lower than April's reading of 7.6%. This slower rate is mainly because of a decrease in fuel inflation, cooling to 3.5% from 5% in April. However, annual motor vehicle inflation accelerated to 7.5% from 7.2% in April.
To what do we attribute this 13th month low? Is it because of the direct intervention by the South African Reserve Bank, or there are other factors? Head of Economic Research at Standard Bank, Elna Moolman, explains.
Year-on-year inflation is lower, but prices are still rising. It's just happening at a slower pace than before. There are a number of reasons for this. One is that some of the prices have increased significantly over the last couple of months and therefore just increasing at a slower rate. Two, we are seeing that many international commodity prices at the agricultural level and also oil prices are lower than they were earlier, and this is then giving us some disinflationary pressure.
The slowdown in the inflation rate in South Africa is certainly very, very good news. So what is especially good news is that the core inflation rate also slowed down. Now, there are a number of reasons for that. Base reasons is one of that. But some other price increases are slowing down, like, for example, food price increases. So food prices are still going up, but at a slightly slower rate. And the inflation rate actually came as a surprise for most economists, lower than what we've expected. I suspect also that the inflation rate could dip below 6%.
Load shedding and power cuts will continue to influence prices for the next few months. South Africa has seen 9 interest rate increases since 2001. Rising inflation have been challenging for many consumers.
Trade remains under pressure due to geopolitics, weakening global demands and a tighter monetary and fiscal policy, forcing supply chain like bottlenecks and inflation above 6%, which is above the target bracket. Inflation will be good in South Africa when it is at the midpoint, and we will then expect the Reserve Bank probably to hold.
In March, the central bank increased the repo rate by 50 basis points to 7.75%. The Monetary Policy Committee is set to meet again in July. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.